So those who build, thank you, those who build and own intellectual properties will have strategic advantage. Have no doubts about it. This is the second most favorite slide of my presentation today. Apart from religion, the reason why humans became the most dominant mammals of the planet or species of the planet is because of agriculture. 10,000 years back, when modern agriculture was invented, that led to the concept of human settlements and civilization as a concept, right? I'll give you a very vivid example. When COVID happened, we were all, since childhood, taught man is a social animal. I don't know why they call man. That's 21st century. My daughter said, why do they say man? Right. Right or wrong? That's unfair, right? Prejudice.
Chairman.
Yeah. So, that's a very, very valid one. So, the bottom line is, we were all taught, and in COVID we were said social distancing. And what happened? Revenge travel. And airline stocks went up. That should tell you why this concept of human settlements was so critical. Because our emotional needs will not get met unless there is a social linkage. Artificial intelligence is, fortunately or unfortunately, going to have far bigger impact, bigger manifestations than agriculture. It's so obvious, and it's moving too fast. Majority of money today, where quant funds are very common, but funds that are using form of machine learning, majority of them are US based, or 67 of the money of the 4 trillion, this is 1.5 years dated data, so it would have increased actually by a mile, is actually US driven. So it's again gravitating there. I was in Saudi Arabia, similar session, but these were all Saudis, and it was a family office forum, and they said that this is China's century. How do you defend that? He said, Mr. Mohit, this is China's century. We know we are dollar pegged. He said, how do you defend that? I said, name 10 Chinese universities. I mean, you guys might be able to name here. Not even one person in the room could name beyond 2. Majority of them couldn't name 1. How many of you can name 3? I'm in Singapore, right? Name 3. It's a very serious and a brilliant point. Name 3 British universities. You can, right? American? Yes. So if the next generation is what I told him, is gravitating to study in UK and US, culturally they are not going to behave and like East. They won't be Oriental, right, in their approach. And because of that, this is not a Chinese century. Till that changes, and in reality I got shit scared, to say the least, when Trump stopped students from coming to America. Because that's the worst thing I think that's where he had bad cold. He shouldn't have done that. Because that's the real reason. Because when the next gen, I was actually going once from Singapore to Jakarta, and there was a lady next to me, very old lady, Chinese origin, based in Australia, and we started talking, and she said, Mr. Mohit, after some time, never send your kids to US for studies. Because you lose them. You lose them. Right? She said, my sons too, they don't want to get married. My daughter says she has 2 pets as a next gen, and don't send there. So the point is, when the next gen goes and studies there, what happens? Their mindset will be, so it's not easy because it's human psyche driven. And that's what the battle is on right now. The battle is about that, supremacy.
India is less than 4%, I agree, because this is 20%.
Because see, India in any case doesn't embrace leverage and all. Under RBI norms, you're not allowed to put more than 250,000 globally, right? And if you look at from an Indian standpoint, while the GDP contribution is we are talking wealth management. So 3.5% of global GDP is India, roughly. However, only 0.75% of global wealth gets invested in India. Forget foreigners putting in, even Indians don't put in India. So that's a paradox. It has improved, but it's still far off.
But there are ways of investing more than 50K.
No, they are, but see, in general, people are scared. You guys are again CAs, half of them are scared of getting a tax notice, right? It is true. And practically speaking, if people start investing abroad, then the depreciation rupee will go up. So it's the right thing to do to actually protect that. But the point is, from a wealth management point of view, only 0.75% of global wealth goes into India. If that equation changes, which is bound to change because you can't ignore a third largest economy and going towards second, right? Then automatically the flow goes up. But right now that flow is not there. The other thing is when you trade, see, we trade many markets. When I trade Hong Kong, I don't have to bother about tax because it's there in the stamp duty. When I trade US, same. UK, hilarious, they have very high stamp duty, but then and there. Zetra, Europe, then and there. Australia, then and there. Canada, then and there. That's one simple change that's needed. Then and there. Funds will start trading then. Because taxation is a big issue. Like today, if we trade $100 million in Hong Kong, we don't care, we just move out. So those are some finer nuances which matter to be redressed. But see, let's not forget, we are talking about America being 37 trillion economy by a mile, right? And we have not even added the influence a lot of these American companies have in the other countries, where they have subsidiaries that are locally, sometimes even listed. But the point here is not about America, it's about artificial intelligence. My objective today is to talk about AI as a technology. And just I'm showing examples of implications and how chaotic the situation is. The entire chaos you're seeing is actually to have supremacy for AI, nothing more than that. What can algorithms do? What can algorithms do? See, they can do many things. A dhow boat, when you start in 19th century, Gujaratis started from Gujarat and went towards Dubai. That's an algorithm. Got a little wrong, you went to Kenya and Tanzania. Got a little wrong, you went to Madagascar and Mauritius. God knows if got a little more wrong where they went. But that's an algorithm. We confuse algorithms to technology, right? What algorithms can do today, they can create consistency. It's a very simple word, but it's a very powerful word. I mean, somebody asked us, we have a lot of clients, so CXO of Google, Amazon, Meta, Netflix worldwide, we manage their money through our AI technology. I repeat, Google, Amazon, Meta, Netflix, CXO, so that we don't disclose names. The game is consistency. One line. And any day if you guys have time, I can run. I was in Jakarta yesterday and a few investors said that, can you show us on Jakarta market? I said, have patience for 30 minutes, I'll build in with the exchange. I did it there. Jakarta Stock Exchange, we ran 75 stocks, gave 6.7% odd return in rupiah terms in the last 5 years since COVID. Our model then and there, it ran millions of code they saw, and it gave 36.5% compounded with no negative year. This is on a market which is manipulated, right? Everyone knows there, stocks are rigged. So return consistency, but what algorithms can do, one line, if I have to summarize, they can time the market. Yesterday in Hong Kong, when markets fell, we made money on long trades. Everything is long. The natural direction of markets is long. People think quant is derivatives. No, no derivatives. Shorting, no shorting. Leverage, no leverage. No leverage, no shorting, no derivatives. We've set up a Gift City fund. That's one of the reasons we wanted to build networks through the ICAI community, because last time when I went there in the 75th year celebration, I was invited as a speaker and you helped at that time generally. So, I was impressed upon that we should have a Gift City fund by the regulatory entire board, and Aniket and Agarwalji were there. And that is why we set it up. And when we ran it on India, in the month of Operation Sindoor, when market fell, our model was +7. We ran long. So algorithms can time the market. We were all taught you can't time the market. Yes, humans can't time the market. Let's correct that. Humans cannot time the market. We can identify when to buy. They can identify rather when to buy, what time to sell, at what level to sell, and at what level to exit if it's a loss. Time the market. Okay, I just wanted to make sure that I take you through synapses of history. That was actually to just make you wake up actually. It was not about history, but I think some of things I have explained and shared, they're very phenomenal and deep rooted, including the price of gold. Just think about the 102 ounce point, or the fact that gold is valued on the Fed's balance sheet at just $11 billion when the actual value is 1 trillion, tier 1 capital of 1 trillion. Come on. How can US be bankrupt? And anybody has heard of this name, Prime Minister Truss, ex-Prime Minister Truss? Truss, sir, she was the Prime Minister of UK. She's the one, when she resigned, then Rishi Sunak became the Prime Minister. You know what she did? The world is still anti-women. And I will prove it by this statement. How? Because she ended up saying something which the US Fed was doing for last 10 years. She said, I'm going to print pounds. That's what she said. Did she not? In simple terms, she said, I'm going to print pounds because there was a deficit. So how do you fund deficit? By printing pounds. So Fisher effect, the theory we have read, if any country, let's say, decides, if Singapore decides to print $500 billion of equivalent Singapore currency, what happens to Singapore dollar?
Supply demand.
So depreciate badly. So the perception of depreciation led to pound going to parity. Yields went up and she lost her job. But excuse me, America has printed trillions in the last 10 years, but the dollar has gone up. How do you justify that econometrically? Simple, neck economy. Because there is a human element even on economic decision making. So the point I'm trying to drive here is that it's not as simple as we think when currencies move. Like Singapore dollar has been appreciating. I have seen articles about Singapore dollar going to parity. What happens to export-oriented economy of Singapore if MAS allows it to go to parity? Allows is the word. So today we have a presence in 10 plus countries. We have 15 funds, including we have started Gift City. We have a Singapore-based fund. It's MAS registered. We have now gone into a joint venture fund with a British firm where the Al Thani family, Skion, is a shareholder with us. We have done jointly with the Al Thani family. And the good part is, as an Indian origin, I'll say we have 50%. We didn't let go control, right? And they have 45. So there we have got approval in Kazakhstan and Central Asia. We are setting up Saudi. In the eastern province, one of our very large clients, he owns a lot of oil wells with Aramco, so we are doing with them. Then we have got approval from Central Bank of Bahrain. We have presence in Mauritius. All the banks sell our product there. East Africa, 30% of my investors are Gujaratis globally. And we have got approvals in Ghana from the regulator, another 2 countries in Southern Africa, UK I mentioned. So what we are doing is we are just going and taking this technology to different countries and asking local funds and fund managers that you want this, then let's do a JV. So that's what we are doing. Cumulatively, we have 30 plus intellectual properties, 30 plus ethnicities working with our company today. We have acquired, primarily we acquired data science, machine learning skills. We have acquired intellectual properties. We have done a few acquisitions in US. We have done recently something in Norway. We have acquired in Spain. We have acquired in Australia, Singapore, Bangalore. All of that we have housed in Dubai Silicon Oasis for obviously tax purposes. So this is the firm's background. The DNA is technology driven. The edge is technology driven. It can run on any market, any underlying, any asset class. And this gives us fantastic capacity across the globe. And a lot of strategies we run today are Japanese strategies, US, any market you can think, we can just plug and play. The true power of a well-designed quant system lies in its ability to generate returns even during downturns and periods of market uncertainty. As business owners, when you run your businesses, you manage it during downturns. The CXOs manage it during downturns. Are fund managers not supposed to manage their business well? How can they say that's market risk? Right? So AI can do that today. And point to ponder, in all your portfolios and future investments, can you afford to not have an allocation to a tech-driven quant strategy? So that's the last slide. Please feel free to ask any questions, any clarifications. Feel free.